Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I do not have the music ready, but hey, it's Tuesday. Tomorrow we got a Federal Reserve meeting. We had a pretty decent downturn in the treasuries yesterday. It looks like we're having a pretty decent downturn this morning, and it kind of puts us in a weird space where, like, I don't know what is the appropriate interest rate, Let's come over to the charts and I'll show you what I mean here. So yesterday in the treasury, it was kind of like a retracement of the huge upside that we had seen overnight. Now it's looking like they're gonna like complete a head and shoulders pattern here. But I don't know. Is it over? Is it over? We'll see. Over here in the S&P 500, they're saying it's over. Like, look, they're breaking out of the range here now. What about oil? Oil? Okay, oil's doing good. Gold and silver coming back. Kappa moving higher. And the dollar continues to fall. But is it going to get interesting with the dollar, right? So that's basically where we're at. And here this morning, we do have some Canadian numbers at the bottom of the hour. Actually, a lot of Canadian numbers like CPI and everything. But other than that, it may be a quiet day. So, this looks like we may be getting close to a point where we may be able to start taking some trades given the liquidity. I mean, the liquidity is still fraught, but it's not nearly as crazy as it was, right? But I don't know what we're going to have to guide us here today. I guess you could just take the default choice of go short and hope it works out. So the flows are likely to continue being short here, right? So that's basically where we're at. I'm not entirely convinced. I'm starting to worry that this is just like round one. You know what I mean? I'm worried that this is just the first round because they're still talking about like backstopping all deposits. Okay, they can't actually backstop all deposits, which is to say, like, okay, they could say we'll insure up to as much as we want. I think that in order to do that formally with the FDIC, you need an act of Congress. But the Federal Reserve could say we'll print more money or something like that. They might be able to find a way to do it without Congress. And they could backstop all of the deposits in a failing bank up to like $12 billion or something like that. Like, there's only so much money in the FDIC, right? But presumably, if they were there to backstop everything, they probably wouldn't have to use it all. So technically they can. But there are people in Congress that say like, oh, we shouldn't change the law or anything like that. So it's like, how do you keep regional banks going given the circumstances? You know what I mean? It's just that's not gonna work. All your regional banks are gonna go kaput. And then on top of that, a lot of assets are just getting hammered. So even though it looks like everything's kind of okay for now, like commercial real estate is looking pretty ugly. Car loans are looking pretty ugly. And so I'm concerned that 6 months from now, this just continues to rear its ugly head. You know what I mean? So given all of that in mind, what is an appropriate 10-year rate? Well, it seems like the market is still leaning towards that the Federal Reserve raises 25 basis points or does nothing.
Canadian CPI year over year.
German Schatz and the US 10-year moved 50 basis points in the last 24 hours. Brannigan Barrett says sell tech today. That's yeah. So let's go and see the Fed tool. Where are you? Fed Watch. Good morning, Uzi. They are trying to normalize. I definitely would say that's true.
10 seconds.
Okay, so I forget what is what. Compare.
Five spot 2%, 5 spot 2%, lower than forecast, 5 spot 4%. Canadian
Okay, so nothing is 4.5, right?
Lower than forecast, 0 spot 5%.
And we're moving to 4.75.
4 spot 7%, 4 spot 7%. Month over month at 0 spot 5%, 0 spot 5%. CPI trim 4 spot 8%, 4 spot 8%, lower than forecast, 4 spot 9%. CPI median 4 spot 9%, 4 spot 9%, higher than forecast, 4 spot 8%.
Yeah, 4.5 to 4.75.
And core CPI month over month at 0 spot 3%, 0 spot 3%.
So they're seeing an 80% chance that they're going to raise.
So the US has a capped China capacity growth for firms using CHIPS Act funds. So again, the US has a capped China capacity growth for firms using the.
Where are you watching? Oh, just on Twitter. He was tweeting. Yeah. He says just a small 50 basis point move in the German Schatz and US 2-year in less than 24 hours. Nothing to see. PS sell tech today. So he's saying that things are normalizing very, very quickly and that tech stocks are going to get hammered as a result. Because what kind of happened was the tech stocks became the flight to safety asset, paradoxically, which is really funny and ironic, really. But if rates are going to normalize and they're going to come back and say, oh, well, they're still going to raise 25 basis points and all this stuff, then techs are probably going to take it on the nose.
So China growth cap at 5% for advanced chips and 10% for legacy tech. So the China Chips Act is to limit advanced tech investments in China.
But yeah, it's only 20. The market is pricing that the Federal Reserve with an 80% probability that they will raise a quarter of a basis.
Canada here seeing the gas prices fall 4 spot 7.
Sorry, not a quarter of a basis point. 25 basis points, a quarter of a percent.
2021. Also comment that the base effects drive the largest year-over-year drop in Canadian CPI since 2020.
The Financial Times don't assume that DeSantis is a safe alternative to Trump. Did you see this stuff the other day? It was like, what was the headline?
Vacancies decline 7.6K or 8 spot.
Ron DeSantis eating pudding with his hands could end his presidential aspirations. And I'm like, yeah, you have to do better than that. I'm worried, like, I don't know. It may just be the last thing that I was reading. It may just be that this was the last thing that I was reading. But I was reading a story on Zero Hedge called "The U.S. Government Looks into Backstopping All Deposits." Right? I really don't see how do you have a regional banking system under the current circumstances? Like the public confidence is shot, and at the first sign of trouble, every business is going to pull their money out of regional banks, and they have already largely pulled their money out of regional banks and put them into the big banks. And we continue. The issue is that the problem is not done. Like, we're still seeing inflation. The Federal Reserve is likely to continue raising rates, and a lot of these assets that these banks are holding that are going to continue to be under pressure. The 10-year Treasury is going to continue to be under pressure, at least under current circumstances. Commercial real estate is going to continue to be under pressure.
3, 6, 7.
Car loans are going to continue to be under pressure.
Down about spot 1%.
So we could move from a liquidity crisis to a solvency crisis where these banks just literally have so much in losses on their books that they're going to have to go kaput. And then at that point, what happens? The remaining people that stayed calm going to move their money out of the regional banks too. So how do you stop that? How do you do that without saying we're just going to backstop everything? Now, you can't like literally backstop everything, which is to say that if like every bank were to go kaput, then you wouldn't have enough money in the fund to do that. But you probably could say that you can do that, and the number of banks that would fail under that scenario would be so few that the fund would be enough, right? But you have to do that with an act of Congress. And apparently, the House Freedom the House Freedom Caucus does not want to do that. So, what I am seeing right now on the political side is there's a group of Republicans that insist on taking the dumbest position possible. I don't know how to put it any other way, but there's a lot of people out there that are like, oh, the banks, they should just be allowed to fail. Shouldn't be a bailout. They should just they want to go back to let it fail. And this is just such a terrible position. And I'm worried that with the Republicans, because I'm a Republican, I'm worried that like the Republicans have a golden opportunity here to get rid of Joe Biden, get a government in place that is reasonable again, and kind of do away with some of the insanity that's been going around in the government and in culture and stuff like that. And it kind of seems to me like the Republicans are determined to fuck it up. Pardon my language, it's a technical term, but you get what I mean. So if a bill came up, if the Democrats put up a bill in Congress that said the FDIC now insures infinity deposits, which is the meme that's going around, right? Okay. FDIC now backstops all bank deposits. And then the House Freedom Caucus shoots it down and it can't get through the House of Representatives. You know what happens? Bank run. Be a bank run after that, right? And then guess who gets the blame? Republicans.
Just to make it as well, I haven't seen any comments
So like
from ECB's Lagarde or ECB's Villeroy.
this is the thing that's going through my head this morning that just has me like really bothered.
Link on the feed to the BI
2 scoops. It really is. Well, you know what? The thing is that okay, so back in, what was it? 2004? I think it was. The head of the Democrat Party, having a hard time. I don't think that I'm 100% yet, because I'm stuttering over my words and I can't remember people's names.
Where ECB's Lagarde now speaking.
Howard Dean. Is that his name, Howard Dean?
The registration link is on the feed.
Leader of the Democrat Party, had leading candidate to become the Democrat presidential nominee. And they're having this rally, and he did this scream that's like, right? And that was the end of his run. Like after that, he lost like every contest. And who was it? Was what's his bucket? Was that Frenchy looking guy? I think that one, wasn't it? Right. So, but anyways, ever since that happened, it's been like people will see these sorts of things and they're like, that's so embarrassing. That means that he's not going to be president. And then they tried to make the big deal over like Donald Trump. He got 2 scoops instead of 1, which is what Uzi is pointing out. I think that people misinterpret all of that. What happened with Dean was him doing that reinforced all of the negative I'm crazy stereotypes that he was like a far left crazy. He was a far left crazy, right? So what does eating pudding with your hands mean? I but you didn't have a spoon, right? So don't think it ends his political career. I don't know how the Republican nomination's going to go, though. I'm not. I used to look forward to this stuff, but I don't look forward to it. I think that it's going to be a huge disaster. I think that there's going to be Republicans that are going to say really dumb stuff at really bad times. It is kind of gross. You know, I didn't actually see the video. Like, what's... Where's the picture? I love how there's all of these stupid news stories that don't actually show the effing picture. See, what's with this? What the hell? I'm here. I should be able to put Ron DeSantis pudding, and I should see the picture. Where's the picture? Zero Hedge will have the picture. Zero Hedge have the picture. Pudding. I give up. He didn't actually... maybe it didn't actually happen. This image of Ron DeSantis eating pudding, is that the picture of him eating pudding? That's just a picture of him. Oh, maybe they don't actually have a picture. Oh, because he was yeah, they don't even have the picture. I don't know. I've noticed it's well, not I've noticed, but like, man, the liberal media is already like gunning for Ron DeSantis super crazy hard. Like, there's stuff about him on Reddit all the time. It's really obvious who they're most concerned about. It's always funny when like somebody, so like, let's say that we're doing the nomination and Nikki Haley starts doing really well in the debates and becomes like the top contender, and you watch like everybody's propaganda will switch to target at her. Well, since the open, we've seen a little bit of buying. I would say that impulsive buying was pretty strong too. I don't know if it's going to continue. That just kind of makes me even more uncertain about what's going to happen today. On the day trading subreddit, there was this whole thing that was like, well, most day traders fail, and then somebody comes in, well, because most day traders only do it for like a month and then give up. And so I always chime in with that, well, even if the people that make it 1 to 2 years, 60% of those still fail. I got downvoted. The Nile is not just a river in Egypt. Always wonder where they get those sets. Other studies. So maybe we should do that. 1% of day traders fail. Missing 60%, so I need to put that in quotes. Here it is, Tradecity. Come on, it's in here. 60. Yeah, there's 2 studies, but there was one in particular, and I'm not sure where it was, that they even looked at people that had made it more than a year, the people that traded more than a year, and it was still that 60% of those failed. I think it was that website that I was just looking at, Tradeicity.
It's been 10 minutes time now at 8:55 a.m. Eastern time.
80% quit within the first 2 years.
Rate of 2 spot 6%.
Trading in Taiwan dropped by about 25% when the lottery was introduced. Really?
Sweden's elector has sold an entire stake in First Republic Bank. So Sweden's elector sold an entire stake in First Republic Bank.
Actually mentions 2 studies, but there's more than that. Every time that I try and look for this stat, I have a hard time finding it, but I always find it. The funny thing is that when you get into like mutual funds and hedge funds, like the stats are pretty bad over there too. like I think that something like, I want to say 40, but I was gonna say, like, I think that it's actually most. I think that most mutual funds do actually like perform up to their benchmark, but that's it. Like, there's no actual like real benefit to it, other than, I guess, the tax savings that you can get from doing a mutual fund. I want to find the well, I don't want to spend all stream looking for it, but I need to find it and save it next time. Actually, I posted it before, so I could go look back in my Reddit post history, I guess. Treasuries came back down there. Oh wait, did I miss something here?
See, the US Treasury and IRS propose rules and tax credit guidance for semiconductors.
I'm seeing on Twitter here, Philly Fed non-manufacturing index negative 12.8 versus 3.2 prior. Is that... I don't see that on my calendar, so I don't know what they're talking about. Silicon Valley Bank's collapse is not a 2008 moment, says UBS. Okay. Am I the only one that finds that one funny? Sweden's Altega has sold an entire stake in First Republic Bank. U.S. Treasury and IRS propose rules and tax credit guidance for semiconductor chain investment incentives. McCarthy says he has not spoken to Trump for 3 weeks. Am I not seeing any of my traders on Twitter talking this morning? That's kind of weird. Am I crazy? Actually, am I like remembering wrong? There, of the people that make it more than a year, even 60% of those still fell. Pretty confident, but where did I get that from?
We're in 5 minutes time now at 8:55 a.m. Eastern time to get the US Red Book year over year to a prior read of 2.6%. Also 10 minutes away from the top of the hour, we do get more comments.
You know, it's something that drives me crazy is that like the data set that they used for those studies like came from somewhere, right? So like where do I get that data so that I can just run it? So that I could come in and filter it and say, okay, for the people that actively traded for more than a year, what were the percentage chances on them? Because everybody on the day trading subreddit acts like all you gotta do is last long enough. That most people give up after a month, and that if you last a year, 2 years, then you will be profitable. And it's not. You probably got that from a CFD broker's website. It's frustrating because the YouTube trading gurus imply they are hugely successful. It always seems disingenuous. Yeah, because losing years don't exist. No, the people that have become, I'm telling you, man, it's YouTube is got a real problem. I think that this extends beyond just day trading. Yeah, because YouTube trading gurus make most of their money from YouTube. Yeah, so listen, I don't consider myself a trading guru. I am trying to provide factual, empirical evidence about markets while trying to trade based on informational inefficiencies. Sometimes I do well because I understand that market, and sometimes I don't do very well because I don't understand that market, and sometimes I just don't do anything because I don't believe that that is a favorable market to me, like we have been for the past 2 weeks. But you do make money from the YouTube advertising. So I am almost to 10,000 subscribers, almost to 10,000 subscribers. We will probably be there before the end of the month, or certainly before the end of April, given current trajectory. So I have 10,000 subscribers, and I make a few $100s a month just from the advertising, okay? Now, you got these guys that are like, they have 100,000 subscribers, right? There's a bunch of guys that have 100,000 subscribers now. Okay, those guys are making between $2,000 and $6,000 a month just from the advertisements. Okay, so 100%, these YouTube channels, they can make money just from the YouTube and not actually be making any money from the trading, right? I think of that guy from Warrior Trading as a guru there. Yeah, he makes that guy has made millions of dollars just from the YouTube and trading education that he sells. To me, like the whole trading education thing doesn't make any sense, to be honest with you. I really don't think that the education that most people are selling is really worth what they're charging for it. Because I think that I kind of stopped there because it's like, I know I'm going to say something like egotistical, but I go out there and I see all of these people on TikTok, on YouTube, everywhere, And people will send me trading courses from time to time and stuff like that. And I look at them and I'm like, I know more than this person. So that's always my first thought, is like, I know more than you. And they're charging like $1,000 a pop or something like that. Like, it's just retarded. It's just retarded. I don't think that's the way to go. I think that what makes more sense is you give people the education for free, and then you start a subscription service where you disseminate your current opinion on markets, right? But I trade for the DOM and bought Bookmap
2%.
and not in Jigsaw, but the tape is not great in terms of order filtering from Bookmap. Now that I saw you have a modified time and sales, can you tell me more about it?
Secretary Yellen.
Sure. So over here in the treasuries, I have these times and sales that are hidden behind my picture just for no reason, but I kind of use them more as a gauge for activity. So like if an order goes through, I kind of want to see like what was the makeup of that order, and so I can kind of get an idea just kind of through watching it in the corner of my eye how many orders went through. Something I do watch for, so I don't know if you can see these magenta lines, that means that it cleared it. So right there, that last time that it cleared it was one lot that cleared it. It's more interesting if like a big lot comes in and clears it. But and I also have one that only shows really big orders, right? So more than 1,000, right? Yeah, so I've not gone through like their whole course and everything, but I have seen a small sampling of their materials, and what it looks like to me from Axia is, you know, I traded the market for a little while, and here's the framework that I developed for how to trade. And the way that their framework kind of works is, here's the different kind of market condition, and here's the certain setup that you're looking for in those conditions. So they don't have empirical evidence. I don't see anything explicitly wrong about what they say. Like, it's all in line with the theory, generally speaking. I like Axia. I think that if anybody has education that's worthwhile, it's probably them, but I still kind of am like, is it really worth X $1,000 though? Not convinced. Not convinced. What is Alice? Sure. Let's pull that over here. Okay, so there is a study written in 1985 by a Jewish man named Albert Kyle. And it's called, what is it called? Continuous, that's right. There is a study by Albert Kyle in 1985 called Continuous Auctions and Insider Trading. And in this study, Kyle sets up a theoretical situation. There is somebody, and we call this person, this somebody, Alice, that knows that at a certain time, the price will be X. So price is currently lower. They know that at a certain time, the price will be X. So given that information, how do you maximize your profits? Because if you only trade it with one contract, then you didn't maximize your contract. So you assuming you have infinite money, of course, right? Assuming you have infinite money, how many contracts should you trade to maximize your profits? Because if you trade too many contracts, then you're going to move the market further than that price, and then when the price comes in, you're going to lose money on some of your contracts, right? So what would be the optimal number of contracts to buy? And so Albert Kyle did this stuff using Bayesian probabilities and so forth to come out with a model that basically expresses the optimal trade size for this Alice. And then for the market maker, Bob, the market maker can then adjust his price accordingly. So the whole thing was basically this theoretical exercise so that the market maker could determine, okay, at what point is there enough volume that somebody is like probably knows something and I need to start moving my price. Okay. Yes. What is the optimal trade size? And the factors that, so you can go and read the paper if you want to see the formulas, because I don't know the formulas well enough here to like draw them out for you and everything. But basically what ends up mattering is what is like the average volatility and what is the average volume, like how much are those things changing. And then they use that to determine an optimal trade size. And that metric is what I put into this indicator called Alice. So Alice is saying if we knew that in the next 30 minutes or whatever your time frame is, those are the settings, right? We can bring up the settings here. So there's a period and there's a target. Okay, so this is saying that we know in 5 minutes that the S&P 500 is going to be 4 points higher than what would be the optimal number of contracts to buy. That's what that means. Let me say that again. Alice is a theoretical quantification of if we knew that the S&P 500 was going to move up 4 points in the next 5 minutes, what would be the optimal number of contracts to buy? Okay. So right now it's about 2,800, which is relatively healthy. Okay. Anything below 1,000 is like you're crazy if you're trading it, by the way. Anything below 1,000, like you're crazy if you're trading it. So what we end up with is a metric that quantifies to us how much opportunity there actually is out there, right? The more volume and the more volatility that you have, the more room you have to work with, and the more money that a potential informed trader could be making, and ergo the more money that will be kind of left behind and left on the ground for you to be able to pick up. So the higher this number is, basically more likely I am to trade. But there are points at which it gets so crazy that you don't want to touch it. There's this other point at which the volatility becomes so insane that you don't want to touch it. So that's what Alice is, right? So you can use it in your algorithms as like a filter. You read this one? Let's see. Will it open in the right tab? Oh, yes, it did. Okay. Go to site. Ooh, I have not read this. If competitive equilibrium is defined as a situation in which prices are such that all arbitrage profits are eliminated, is it possible that a competitive economy always be in equilibrium? Clearly not, for then those who arbitrage make no private return from their privately costly activity. Hence the assumptions that all markets, including that for information, are always in equilibrium and always perfectly arbitrage are inconsistent when arbitrage is costly. We propose a model in which there is an equilibrium degree of disequilibrium. Prices reflect the information of informed individuals, but only partially, so that those who expend resources to obtain information do receive compensation. How informative the price system is depends on the number of individuals who are informed. But the number of individuals who are informed is itself an endogenous variable in the model. The model is the simplest one in which prices perform a well-articulated role in conveying information from the informed to the uninformed. When the informed individuals observe information that the return to a security is going to be high, they bid its price up, and conversely, when they observe information that the return is going to be low, thus the price system makes publicly available information obtained by informed individuals to the uninformed. In general, however, it does this imperfectly. This is perhaps lucky, for if we were to do it perfectly in equilibrium, an equilibrium would not exist. This was the paper that finally forced MIT to abandon their dogma and publication blackout of anything against the efficient market hypothesis. Really? When was this published? Oh, this was from 1980? That happened way back in 1980? Really? My diamond cells is so cool. Dude, the market depth tape. Well, you're not seeing very much on it right now because the market is so illiquid. But yes, I have a market depth tape that shows you large orders being added or taken off on the DOM on the level 2. So it sends you an alert when somebody puts a big old fatty order on or something like that. And yeah, I'm quite proud of the market depth tape. I think it's one of the better parts of this indicator suite as well. Is it like that setup of Jigsaw? Well, I mean, I don't do the DOM, right? All of these DOMs are Jigsaw. My market, it's a market depth tape. So it's just like a reconstructed tape, but it's doing it for the market depth. So if somebody came in and added 2,000 contracts at 114.070, you would see it print here. And it prints different colors based on whether it was a bid being added or a bid being removed, or an ask being added or an ask being removed. And you can change the colors, and you can change your filter, essentially. So I kind of hesitate to do this because if you turn it down too low, you know, it gets a little crazy. But I could probably put it to 50 here. Okay. And you see how, so somebody took off 51 contracts at 07.5 and added 100 at 08.5, right? So those are bids and those are asks. And so you can kind of see how they're adding and removing contracts on the inside there. And then I don't know if you hear it. You should be able to hear the clicky click sound. Yeah, it's not about market orders. No. Because the Jigsaw one does that. Yep. It's only the limit orders, correct? And yes, that could alert you to orders that are potentially spoofed. The whole spoofing thing is interesting to watch the evolution of, because we went through a period where we didn't see very much spoofing at all. And then we went through a period where recently, like I would say in, was it January, I think, where we did see a little bit of spoofing, and then it disappeared just as quickly. But it used to be that all anybody wanted to talk about was spoofing, and now people don't really care so much. Why do you like that? You can also see it on the DOM. Well, because what will happen is somebody will put 1,000 lots on there and you don't notice, right? You don't notice it right away. And then you're like, okay, so what actually happened? When did it happen? How much did they actually add, etc., 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 right? And if I wanted to show somebody on Twitter, like, oh, there was a spoof, right? How do I do that? Well, now I can just take the picture of the market depth tape, and it tells you exactly what happened. Oh, they added here, they took it off here, they moved it around, whatever it is. You can see very clearly what happened. And if you just filter it appropriately, in a normal market, about 1,000 contracts is good enough, right? it gives you a little clicky sound, so you can kind of see when people are making moves, right? So that's why I made it. Let's change the size back to 900 here. The thing is all of these indicators, I didn't write this to be an indicator suite to sell to people. It took me quite a bit of work to get all of these indicators to the point where it would be acceptable for other people's consumption. I created all of these indicators because I needed them for my trading. The synthetic dollar index and the spreads in particular, I was just flabbergasted that those were not indicators that were like included with NinjaTrader. And once I started doing them, I kind of realized, oh, like there's actually a lot of really interesting complexities in here. And so I built it up, you know. So now the spread indicator that you get has a lot of interesting features, like it will allow you to change what you're showing historical. So the historical bars, you notice how the historical bars on this chart don't have tails? It's because the high of one instrument doesn't necessarily correlate with what the high of the other instrument was. So the bars that are calculated historically aren't entirely accurate, and that's why they're gray. Whereas the bars that are calculated live, those ones are accurate, and so those ones are colored. And I had to do all this stuff to make it so that it would draw candles, and right. So those are the things that the most valuable things in the indicator suite, in my opinion, are the dollar index, the spreads, and the market depth tape. Yes, there is a video in there where I go into depth, where I go deep into every indicator and what I'm using them for. There is also pretty extensive documentation on the website. So if you go to speculatorseth.com, like one of the first things that you should see is detailed documentation. Link for detailed documentation. Can you make a list for the best books for understanding markets or in general? So I mean, there's so many books, and of course my favorite book is Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot, Julius Menard, Jonathan Donier, and Martin Gould. By the way, every single one of these guys is a super big heavyweight in the market microstructure field. So this is an amazing book. Beyond that, it really depends on what you're trying to learn. So for instance, somebody earlier was saying understanding options and futures. I've never read that before, but you know, having a book that goes through options trading, I is probably useful to understand. Yeah, I can link you to the video, I guess. Let me go find it. It's never been a very popular video because it's took a long time to go through all of that stuff. And but for people that really want to get in depth, I kind of changed some things. So like when we started, it was a subscription thing where you were only paying like $5 or $5 to $10 a month for it. And I liked that model. I thought that people would prefer that model, but people preferred to just pay $100 up front. So we changed it to that. Oh, here it is.
Did you know that you
only super trend 100% win rate? Yeah, so you guys kind of caught me ADHD earlier when we were talking about YouTube gurus. There was a point that I wanted to make. Okay, so I had started with, okay, like look, somebody with 10,000 subscribers, you can make between $200 to $500 a month just from the advertising, depending on like what kind of affiliate stuff you're doing and whatnot. Okay, but once you get to like hundreds of thousands, now it's to the point where like you can live off of it. And if you're like the top creator in the space, like some of these guys are literally making millions of dollars just off of the YouTube, right? And a YouTube has a big problem in my opinion, because the way that the YouTube algorithm works is it prioritizes which video gets clicked on because of the thumbnail, and then the engagement on the video. And it's turned out that like how dramatic and clickbaity you can be is what ends up doing the best. So if I went and I made a video that's like this amazing strategy, it's 80% win rate guaranteed, yada yada yada, those videos do really well. So for instance, I watched a video the other day where somebody was proposed a smart money concept strategy based on a break of the overnight high or low, and they claimed that the strategy had an 80% win rate. Absolute nonsense. It's absolute nonsense. And he says you can backtest it yourself, and then he made a video where he backtested it, and what he considered backtesting was looking back at the chart over the last week and guesstimating what they would have done in that situation. That's what they considered backtesting. So I went and I programmed it up. And it was not even 20, it was not even 30% win rate actually. And not only that, but with all of the conditions that he had in there, it extremely well, it only happened like every other day. It wasn't a very likely setup, or rather it didn't happen very often. So you don't really get enough data samples to really be confident in the results. It did come out profitable, but not profitable on a risk adjusted basis. Like the Sharpe ratio for it was terrible, absolutely terrible. But there's videos getting tens of thousands of views, and there's like this whole cottage industry now around ICT and smart money concepts, and it's all complete bullshit. It's all complete bullshit. And like I hate when I'm like I'm slamming on people, because I don't really think about other people in the space too much. I do know what's going on, but I don't think about it very often. I kind of like, it's kind of like it gets forced on me. Like I don't care what people are doing, and I don't look, but it gets shoved in my face, and so I see and I remember, I know what they're doing, right? That guy, that ICT in particular, is a total narcissist, man. Like I've never seen like a more obvious example of a complete narcissist just talking complete nonsense. And he does well on YouTube. And so my conclusion is that the YouTube algorithm optimizes for narcissists and excessive risk takers, at least in the trading space. And I think that this is going to be, you're going to see in the next 10 years, there's going to have to be a huge paradigm shift, because people are probably going to move away from browsing blogs and stuff like that, right? If you have a question, you're not going to do a Google search and then see what kind of website comes up, because it's been so gamed and everything that you don't get the answer that you want. You don't get a reliable answer. So it's going to move to AI probably, right? It's going to turn into you ask ChatGPT and ChatGPT gives you an answer, right? Well, the problem with ChatGPT right now is that it will give you really confident answers that are complete nonsense, right? And with the way that the algorithms are set up and everything right now, that kind of just makes it worse, right? Because the algorithms that we have don't select for the most detailed or correct information. They select for the most dramatic claims, right? So as the machine learning becomes more important, this is going to become an even larger deficit with the machine learning, and they're going to have to make some fundamental changes to how they rate content, right? They're going to need a way for the machine learning algorithm to judge what is authoritative and what is not, or what is likely to be true and what is not likely to be true. And then you have to get into this whole thing about who are you to decide what is true and what's not true. The sad part is people start putting their life savings on this and they lose it. Yeah. What is a trade? Is each contract itself a trade, or is the whole position? I suppose that it would depend on what your strategy is and what you're trying to accomplish. But when I'm doing a back test, a trade is just a single contract. And when I'm doing a back test over a setup like that, I'm only back testing it with one contract at a time. Usually I prefer to have something that's like, when you get the signal and you're in it until you get a signal to get out. Right.
So Xinhua cites China
because we're trying to quantify how much of a predictive edge that actual setup has, right? Because what happens is that people do all sorts of crazy things with their risk, so that they're likely to win just because of the amount of risk that they're putting on, right? And that kind of obfuscates what edge there actually was, or in this instance, lack of edge that there is in the actual setup, right? If the actual setup is like truly has an edge, then you should be able to generate profits just from the signal, right? Well, probably. I mean, you really, if you're going to run a strategy, you're going to combine all of these things together. But I like to test just the setup itself first to quantify what is the edge in the actual setup, right? I think if you make a video about DOM trading, an example for 2 hours where you look at the different, well, no, so I have a whole series about everything that you need to know for the DOM trading. But, and if you want to see examples, then you just have to wait long enough on the stream, right? The past 2 weeks has been a bad example because we don't want to trade in the extreme volatility. But, you know, I reserve that stuff for the stream. Price action is the holy grail skulls. Yeah. I tell you what, it's a little insane how big the price action thing has gotten. And the price action traders, this one doesn't make any sense to me, but it keeps happening over and over. There'll be a thread on Reddit and people will talk about that's about price action trading, or somehow price action trading comes up, and I'll point out that there's no actual edge in it, and somebody will get hyper triggered about it and will go into like a 30 comment deep, you know, back and forth with me, right? And it always ends up the same way, which is they don't have any empirical evidence that suggests that it actually works. And that they don't actually know what empirical evidence is. It always comes down to that. But when I have these arguments with these people, man, it is nuts. I mean, like, these people are nuts. They will start harassing me. Like, they'll start following me around Reddit and commenting on other posts. They'll start sending me messages every day. Like, these people are just absolutely insane. And for some reason, when I get on there on Reddit and I make an argument that price action is not effective, it attracts the worst narcissists and psychopaths on the internet. Explain that. Why would price action be more likely to attract narcissists? I don't know. Maybe it's because a narcissist just really hates losing and they're not going to do something where they lose for very long, right? And so maybe they're attracted to price action because most price action strategies end up taking on excessive risk, right? I get it, but you like to make money, you put odds on ads. Yeah. I guess the other thing, though, is something that I'm trying to teach and get across on this channel is that we're not looking for quote unquote setups. We're not looking for technical setups, right? I use the information that's in the DOM and in volatility and in correlated assets to help me assess what the current market conditions are. But none of that is the basis for the trade. The basis for the trade is always a piece of information that I have that I do not believe is correctly factored into the market that suggests that other people are going to be buying soon. And that's almost always informational in some degree, like a economic news release or something that I know about the end of month activity, that sentiment, that sort of a thing, right? And I'm not looking for, oh, somebody just put a big stack on here, so that means in this situation that I should buy it or I should sell it or whatever the deal. No, that stuff doesn't work. Technical entry points tend not to be very effective. So yeah, if I made that video, people would be like, well, where's the exact setups? But I mean, I do talk about things like, for instance, we talk about icebergs and catching the edge in one of the videos, right? That's probably the closest you're gonna get to that. And that video series does really, really well. In fact, I'm really surprised that in the beginning I was like, oh man, these aren't doing as well as I thought. But over time, the algorithm figured it out, and now the DOM, the first video in the DOM series is the video that YouTube sends people to. So. I don't know. I always go back and forth, man. It's just me being ADHD and having a hard time keeping a focus for too long. Sometimes I'm like, now that we've put all of the content that we think helps people the most, we should just put whatever it is that's out there that will get the most views. Well, I'm not quite 100% sure what will get the most views. It seems like when I talk about things like your trading platform, your computer hardware setup, that sort of a stuff, that attracts more people than actual information about the market. I would think that information about current events would also help, but I haven't gotten one of those to take off yet. And the other thing that I would say is that, you know, overall, we have really good content on the channel. Like, of course, we continue to work hard and we'll find new stuff. And I have like a whole slate of content to make. Every time I think that I'm like out, I just like the list gets bigger. But at the same time, like that drive. So it used to be, man, I got to get a video out. Like, it's been 2 weeks. I got to get a video out. I got to make a video. Just that constant thing in the background. Itch that, oh, you're not ready to make your next video. You got to work on that. Now I don't care. Nowadays is just like, yeah, what happens. I would like to be able to have more time to make more videos, but I have to. So maybe it's like, well, I don't know. It's not like the channel's stagnating. Like I said, we're to 10,000 subscribers. And once you get to 10,000 subscribers, that's when things can like really speed up really quickly all of a sudden for some reason. So I don't know. Well, the thing that always bothers me is the stream itself, right? There's not as many viewers on the stream as I think I should have sometimes. Like we will occasionally get up to 20, 24, 36. But I feel like that the stream should be more like 50. And there was times when we were getting 50 and then like YouTube changed the algorithm. And so I feel like that the stream is a lot more useful and beneficial than it gets credit for. And I don't know how to adjust things so that Google likes it, you know, but then it just brings me back to YouTube probably needs to change the way that they filter for content in a very dramatic way at some point. At some point, they're really going to have to shift it. What's the latest odds for 25-point rate hike tomorrow? It looks like it's priced in. Yeah, when we looked at the Fed tool at the beginning of the stream, it was 80% chance of a 25 basis point rate hike. So I was surprised that it was that high, but it does seem like the market is zoning in on that. So let's get back to talking about that, because I
text release from ECB.
I feel like that kind of information is more useful. That kind of conversation is more useful for people on the stream when people don't have direct questions about the order flow, right? So the Federal Reserve just printed a lot of money and put it into the banking system, right? Like it was like something like $2 trillion or something like that. Like, it was a lot of money that got put into the market. So what happens when you've put a ton of money into the market, but then you keep interest rates high, right? Like, you're giving people more money, but you're still charging them a ton. So does that actually help financial conditions? I don't think it does. Oh my gosh, YouTube did do something weird, because we had for a moment 93 people on the stream. That must have been some sort of a robot or something. that or the metrics are just screwed up. Anyways, so like, really, does it make sense to print a ton of money and then keep increasing interest rates? I'm not sure it does. But you can't decrease interest rates right now. I mean, come on, that'd be a disaster. So what do? I don't know if there's anything you can do. It just brings me back to this whole thing that's like, when I game it all out and I look at what's going on, I'm really, really concerned that in the next 6 months that we will have another bout of volatility. It'll be much more serious. So let's see here. Just want to double check here. I'm not like dropping frames or anything like that, am I? No, I think we're okay. Look at this. This is really weird. I haven't. So this has happened before, where like somebody would come in and view bot the channel or something like that, and you'd get all of a sudden like all of these viewers, and it drops off. That must be a view bot. But then at one point it went down to 2. So did you guys have like, so is that just the YouTube metrics are like screwed up, or was that like a the stream got disrupted somehow? I don't know what was with that. It's weird. It's never been like that before. Let's see here. What's the initial move in the S&P 500? Looks like a very strong buy, guys. And the dollar seems to be pretty firmly pointed to the downside. I'm kind of looking at this. The timing seems wrong. Like, we should have already have gotten a move, and overall, this, I would say that aside from that initial buy in the 5-year that was a little crazy, that the activity has been relatively light in the treasuries. So I'm not sure from that's kind of holding me back from taking a trade. But I am kind of also looking at the price here and everything and thinking if the treasuries are going to go lower, this is a pretty good spot to get it. Seems long to me outside the value area, but we can close the gap at 39.85.
So the Canadian
Well, they're
dollar
above 4,000, right?
at 1.3645 per US dollar.
I don't know. That's a little bit more volatile than I thought. I don't know if you would get 3.58, but it's moving around there about half of a basis point in oscillations. Another thing, if we took a trade that we would have to keep in mind is that curve is flattening, which works against us for going long rates in the 10-year at least. It would make more sense to come over here and do it in the 2, but you're like paying up big time for that. So I'm interested this paper that I will read it. Wait, did I download it? I think I have a account over here. I'll have to find it later. How do you predict, treat, or trade bad news when the market takes off to the moon? Well, so I very much prefer news that's like, sometimes you get news that kind of goes under the radar, right? I have a video that kind of goes through the different kinds of situations that you'll probably encounter that I think is really, really good rundown. And I actually go through like actual trades that I've taken and everything and explore how we're using the news to make those trades. So you should go watch that. But, you know, I have a news squawk. I'm listening to the news squawk. I can hear. And when I hear the news squawk, right, my first thought is going to be, does this cause people to buy or to sell? Now, part of that is based on, you know, whether that creates more or less demand for treasuries and more or less demand for equities, right? But it also depends on what people's current positioning is. Like if they're positioned a certain way, and then a piece of news comes out in contrary to the way that they were positioned, then I'm going to expect more volume, right? So you have to sort that puzzle out. And then the second thing that you have to do is you have to estimate how much volume is actually going to come out based on that. So what I'm going to do is I'm going to say, okay, I think it's going to, we just heard a headline, market's going to move down. I see the order flow come out that it does indeed move down. And then I'm going to say, well, this is like earth shattering news. This is something that could be like 20, 50, even maybe 100,000 net change in cumulative delta. And then I look over here at my cumulative delta and I say, since the news has changed, only 2,000 contracts have actually taken it. So then I take it. And that's how I do it. And then when it gets to the point in cumulative delta, at which I think there's been enough trade off of it, that enough orders have come out from that headline, then I'm going to look for a liquidity hole. I'm going to look for an area where the market makers don't want to put up liquidity anymore. And that's a good sign that they're going to hold back there. I was kind of hoping to get 358. I don't think after I had said something about it, I don't think that it ever gave us a fill there. How can I get your indicator? Which indicator? I have a whole suite of indicators that you can look at on speculatorseth.com. You just download it, install it into NinjaTrader, free 2-week trial, $100 license, lifetime license after that. And on the website, there's detailed documentation. So what I'm going about just there was that there has been a little bit of pressure to the downside, and it seems like they're pushing back up, and something may be happening with the yield curve here. So that makes me question the strong downside trend a little bit. How did you connect? I do not connect them together. What I do is I connect them both to rhythmic. You know what? I shouldn't talk about my setup anymore, because now with NinjaTrader 8.1, my setup does not work in NinjaTrader 8.1. My setup does not work in NinjaTrader 8.1 anymore.
ECBs and RIAs.
The indicators will still work. I tested that. The indicators still work, but I would have to go back to NinjaTrader brokerage to continue using NinjaTrader after 8.1. The twos are leading the sell-off. Well, I'm not liking, I feel like I kind of missed the best opportunities to try and hit this. But there may be a place to try and catch the edge here. 1,000 trading at 07.
US Treasury 2-year yield rises 20 basis points on the day to 4.18%.
Well, now my news squawk is picking up on this. It's funny because what I need now is like the reverse bridge, where the information comes in through Jigsaw and then gets forwarded to NinjaTrader. Because you can only use NinjaTrader on NinjaTrader brokerage anymore, and I wasn't happy at NinjaTrader brokerage. I just wasn't happy at NinjaTrader brokerage. You know, this looks to me like interest rates are going to keep going higher here today, but it may be a real slow creeper. I'm kind of hoping for like a little bit of cascade of a volume coming through here. Well, I didn't like that stack at 07. You know, like there could be like a real breach of the lows and some stops and everything, but I would, and the pace of activity has certainly increased. There's a lot more activity on the level 2. There's a lot more volume going through, but it's not actually like going. This over here in the S&P 500, this up bar had about 5,000 net change in contracts on it, and since then the cumulative delta has just been flat in the S&P 500, even though they've come back. So I think that, I don't know if this is a very good trade location, but I think that we're probably likely to continue moving up in the S&P 500 based on the volume. And I mean, what would be the predictor of order flow that we have? Well, we know that it's like a risk on trade right now. So they keep showing us 3,595 in the micro 10-year. The 30, now that's interesting, because it was like, oh, hold on. Oh, she's just grabbing the baby monitor. Anyways, at first, like Octavia said, the 2 years seem to be leading the way in higher rates. But now look, it is actually the 30-year is at its lows and the 2-year has backed off a little bit. That's curious. It does seem like there is someone maybe accumulating there, as they've traded back and forth at 07 a lot. Okay, but in the well, okay, I don't see orders here. The micros did break 3595. Okay, there's an order at 3598. Well, I'm pleasantly surprised. The 30-year leading us lower is just about the best situation that I could have gotten for that trade. So let's see if it follows through and we get a good winner out of it. Right now, the change in volume, let's see here, 275. When we started, we were around 275, let's say. 273, and now we're 288. So we are more than like what, 13,000 contracts short, and it's been pretty consistently sell all morning. So I'm thinking what might happen here is that we do get a little bit of a rush, but it might be really brief, because this has just kind of been a slow moving freight train down all through the whole overnight session, right?
Investment bank is still ongoing. Credit Suisse executives are said to pitch at potential buyers of investment bank, and UBS is said to show little interest in CSFB plan and Klein deal.
I'm getting some headline about some deal with UBS, but I'm not sure what they're talking about. Yep. CSFB plan. UBS is said to show little interest in CSFB plan Klein deal. What is that? Yellen to reassure world that the Treasury is committed to bailing out regional bank depositors. Well, that's good. Auto loan denials hit 6-year high as distress cycle shifts into gear. I'm just reading the top headlines on Zero Hedge. If we see deflation ahead, it requires fiscal and monetary fusion. Well, yeah, but maybe like don't overdo it next time, please. It seems like they're all waiting for Yellen to speak. Oh, you're right. That's tentative at the top of the hour. So let's read this story. The sound and fury of demands for universal deposit insurance are growing, with Bill Ackman and Elon Musk the latest to join the calls for this ultimate step, as we detailed last night. Bloomberg reports Washington is studying just how to guarantee all $18 trillion in U.S. deposits, with just $125 billion in the FDIC's deposit insurance fund. But since Treasury Secretary Janet Yellen's embarrassing and confusing comments about who gets saved and who doesn't, and who decides during testimony before the Senate Finance Committee, it appears Washington thinks trotting out the little old lady one more time to reinsure nervous depositors is the right path back to financial stability.
Customers, according to
this could be I'm not quite sure why you would want it to be a short. This is basically a PR push to reassure markets. So I would expect that that would be something bullish, unless she like royally screws it up, or the proposal that they're going to come out with is like really terribly awful, right? That said, any boost that we do get might be really, really short-lived. Just like what I was saying, we did get a little bit of favorable excursion there from the 30-year, but it was like super, super brief, right? It's the slow-moving freight train. And anytime that it gets a little bit too fast, it almost immediately backs off. As Reuters reports in excerpts of prepared remarks to an American Bankers Association conference, Yellen said government steps taken in recent days to protect uninsured deposits in 2 failed banks and create a new Federal Reserve liquidity facilities have shown a resolute commitment to take the necessary steps to ensure that depositors' savings and the banking system remain safe. But she immediately switches to try and quell any picking winners sentiment by assuring her audience that the steps we took were not focused on aiding specific banks or classes of banks. Our intervention was necessary to protect the broader U.S. banking system, which is probably what she was trying to say when she made those original comments. And crucially, she claims that they will rescue all depositors again, and similar actions could be warranted if smaller institutions suffer deposit runs that pose the risk of contagion. Of course, there is the obligatory "don't worry, there's nothing to see here" comment. The situation is stabilizing and the U.S. banking system remains sound, Yellen says. The Fed facility and discount window lending are working as intended to provide liquidity to the banking system. Aggregate deposit outflows from regional banks have stabilized. And the Zero Hedge says, tell that to First Republic holders.
9 million to 3.7 million.
The Treasury Chief didn't directly address the issue of temporarily expanding federal deposit insurance to cover all deposits in the excerpts released by the Treasury Department. The Treasury is committed to ensuring the ongoing health and competitiveness of our vibrant community and regional banking institutions. Of course, the only path to this is actual legislation, which means Congress. Any universal guarantee on all bank deposits, whether implicit or explicit, enshrines a dangerous precedent that simply encourages future irresponsible behavior to be paid for by those not involved who follow the rules. The House Freedom Caucus said in a statement, "We are confident most of the progressive wing will not be too excited about bailing out billionaires and corporations with orders of magnitude more in the bank than the FDIC limit. And that means don't hold your breath for any blanket unlimited size deposit insurance." Yeah, I don't think that they're going to do like a full deposit insurance, but I think that they're going to do whatever is necessary to prevent a larger scale run on the regional banking system. Right? But how they're going to do that without an act of Congress, I don't know. Well, right now, it's talking about the S&P 500. Right now, they're caught in the middle of a doji with really huge wings. So, I'm seeing like a little bit of, vibration over here in the Treasury still. But this looks different from what was happening before we broke and when the 30-year tumbled there, right? This looks more like correlations. I'm not seeing anything too crazy happening anywhere. The dollar is kind of starting to turn down a little bit, though. So we'll have to see what the dollar does here. What time does the Treasury market open? No, it's not the same. The Treasury market basically opens an hour and 10 minutes before the S&P 500 does. So it opens up at 8:20 Eastern time. And then there is a pit close at, what would we say, 2 o'clock Eastern time? It keeps trading after the pit close, but that's when like the options pit closes. So you see a lot of volume in the treasuries at that time. See, it was seeing a little bit of push, doesn't go. A little bit of push the other way, doesn't go. I mean, I got, oh wow, okay, interesting. Was just about to say, okay, so how many buy orders did we get behind me? Well, 20, 28, 48, 36, 42, 44. So almost 50 contracts in the micros behind me. There's a bunch of volume just traded there at 3.596. What's Joseph Wing got here? Really appreciated this discussion on CRE. It discusses how CRE is comprised of many segments, each with its own fundamentals. Officers may not be doing well, but that may not be representative of all CREs. Also discusses how CRE is financialized and who may bear potential losses. Is there a way to, on Jigsaw, to get historical data for the volume profile? I opened Jigsaw after the market opened, and now my volume profile is different than yours. Okay, so it's probably gonna look different from mine because
evolving on merger,
or it may look different from mine because mine resets when the session starts, and you may be using overnight volume profile, right? So the first thing is when you're selecting your instrument, you get to select which session template you're going to use, so that matters. But then even then, I have found some situations where it doesn't seem to match up to what it should, you know, and or like it doesn't load the volume correctly and you have to like reload, like load a different instrument and then go back to the instrument that you want
basis points to credit
and see if that fixes it.
14.1% end of 2022.
Yeah, when you're selecting your instrument here, there is this session thing right here. So you could say I don't know which one it is that you want to do, but I digress. Like my thing is that all of this stuff about like where the value area is and where the point of control is, and I don't really care too much about that stuff, right? Oh yeah, on my ES ladder. My ES ladder is going to look very different from yours because I consolidate. I use the tick multiplier. Okay, just noticing that in the last 5 minutes, there's a little bit of a turn in oil. Gold doesn't look too good. Oh man, it looks like I'm gonna take a loss on this. So the thing is that for me to have been in a, well, okay, so it's been 17 minutes. That's not the end of the world. It's really when I've been in it like 30, 45 an hour and it's like, it's not going, that I start to get like really nervous. And it does look like some of this has to do with spreads.
VRS and VRS are like
it's still steepening.
The acquisition by UBS does not proceed.
All it does is reset it. It doesn't.
Also come
What is your data provider?
which we do not expect, apologies, given Credit Suisse's access to central bank funding. So they, again, just to repeat, their ratings would also come under pressure if liquidity deteriorates, which we do not expect, given Credit Suisse access to central bank funding. 1 minute remaining. I'll lead with the US existing home sales. So just seeing First Republic extend gains to 37%, triggering a volatility halt.
Okay, so what I'm hearing is that First Republic shares just shot up and triggered a halt. So that may be why we're getting a little bit of movement here. The S&P 500 is like back up at its highs, right?
10 seconds. Four spot 58 million, 4 spot 58 million. That's higher than the forecast of 4 spot 2 million. Existing home sales change month over month. 14.
Okay, existing home sales change was 14.5 versus an expected 5. Wait, what? Wait, what? Is that right? US existing home sales change 14.5% versus an anticipated 5%. Did the housing market really do that well over the past month? That is, has there ever been? That doesn't, I'm not, okay, so hold on. Looks like we're back in the green, but only by about 5 ticks. So we're still kind of had about equal excursion on both sides here. If I come to this and graph this existing home sales change, let me interesting. Okay, so there's a big old bid at 06.5. Just showed up.
US stocks
1,600 contracts.
gained slightly after the February home sales data.
I think that percent number. So when I come to Forex Factory, I get actual 4.58, forecast 4.19. So I think that number largely reflects just how dismal the data in the month before was. Wow, they just plowed into that 06.5, didn't they? It didn't stay. It wasn't able to go offer, but because there was almost immediately a tick up, but they just plowed through that, man. So this is turning into kind of an interesting battle, isn't it?
ECB says write-off.
I do find it concerning though.
Before equity wouldn't be acceptable.
I wouldn't. So I don't think that number is like, oh my gosh, crazy sort of a thing. But I am a little bit concerned about it. Just that it seems like that froth in the housing market could come back very, very quickly if the Federal Reserve were to, like, you know, be forced to reduce rates or something like that, right? So the S&P 500 extended some gains there and is coming back to 4027 area. I'm not quite sure what it is about. I'm getting all of these ECB headlines. So there's lots of stuff going on, and I'm having a little bit of a hard time interpreting it. Yeah, you look confused, not concerned. I feel a little confused. There's this ECB stuff. I think that's something else.
Deputy U.S. Treasury.
So there was this other headline that we got a little earlier. There was Fitch places Credit Suisse Group and subsidiaries on ratings watch as evolving on merger. Because apparently the merger deal is, they're still trying to like change some details about it or something. Right? Yeah, well, I don't know. So the order flow in the 10-year is very fraught here. So I think that this market is not making much sense. I'm going to exit.
And Adeyemo says the Treasury is considering what steps can be taken to further strengthen America's financial stability. And we have posted out the video to US Treasury Secretary Yellen on the newsfeed for those that are interested.
Okay, Yellen's speaking here now, so that could also be part of it, right? Oh, I got a terrible exit, didn't I? I think it's gonna go without me, but I feel a little bit too out of the loop here. It's making me feel awfully FOMO right now, so I think I should probably try and disconnect myself from it a little bit here.
Maria says, I expect competition for deposits to increase.
Why is the S&P 500 turning back down so hard? Something weird's going on, man. Okay, I just heard a comment from an ECB spokesperson, or from an ECB speaker, let's say. Oh man, it's starting to get volatile. Strong bid 07. So that the headline was ECB's INRA. I expect competition for deposits to increase. Dollar popping, yeah, something's up. It could just be Secretary Yellen speaking, though, right?
That pose the risk of contagion. I believe that our actions reduce the risk of further bank failures that would have imposed losses on the Deposit Insurance Fund. Second, we announced a new facility.
The audio on this is really, really light.
The Fed's new lending facility.
Oh, look, they already have closed captioning. Oh, because it's CNBC.
Is designed to help banks.
So just seeing here, traders are loading up on both hawkish and dovish SOFR plays before the Fed meeting.
I'm gonna mute that just because it's CNBC.
So early SOFR options flow Tuesday included heavy buying in the December 2020 put Condor and targeting an equivalent rate of 5% to 5.25% into year end. Also, some buying of dovish positions seen ahead of Wednesday's Fed decision, where market pricing leans towards a 25 basis point rate hike.
It's kind of doing it again. So we did get a little bit of a rise there. So I would still be up. I'd be up $5 if I kept the position. Okay. But like, look, it does the thing. It did tick some new lows, and now it's kind of being nonchalant again. I think on this one, I think I had the trade right.
The New Zealand dollar dropped
I
more than 1%.
I could have held it. I would have been lucky.
and the Australian dollar down as well.
Overall, it seems to me like these aren't the best conditions, though. So when you've just gone from a market that was like really crazy active and then all of a sudden it gets really tight, that's usually not very helpful for trading, right? Financial Juice tweets, traders stock up on both hawkish and bearish SOFR plays ahead of the Fed meeting. I don't know, that reversal there in the Treasury was awfully fast too. Like the liquidity firmed up there very quickly. And now we're back to where we were. Right? So it's like in order to get a winner to run, you have to wait through like 4 or 5 different cycles. Go for 2 ticks with this ES? Yeah, that is kind of crazy to think about, huh? That the ES has been so tight. Like it's been relatively bad here in the Treasury, but that's even more crazy over in the ES. Should the Fed hike tomorrow? I don't know. I think yes. I think that if the Federal Reserve backs off, that inflation would come back with so much vengeance that I don't think it would be a good thing. And not only that, but if the Federal Reserve were to like reduce rates tomorrow, that would be like a really, that would scare markets. Like that markets would be like, oh, why is the Fed have such a lack of confidence in the economy? Right? Okay. The flow of early SOFR options saw heavy buying in a December 2023 put condor with an equivalent rate of 5 to 5.25 target for the end of the year. There has also been some buying of dovish positions ahead of Wednesday's Fed decision, with market pricing pointing to a 25 basis point hike. So somebody has been betting in the SOFRs essentially that the Federal Reserve will have to continue buying through this whole thing. That they'll have to continue on their previous hike. So it's a condor that kind of suggests that the market sees the volatility increasing and they think that it's not, that it's just going to go and do what was the plan all along. Right? The plan was 2 more 25 basis point hikes and then hold it through the summer. The bluff. I don't think that anybody knows what's going on. I think that well, I mean they're doing the meeting right now, right? The meeting is like the 2 days. I think that the FOMC members themselves walking into this aren't sure what's going to happen. Okay, so I see Janet Yellen walking away and sitting down to speak with an interviewer. Okay, so this action is probably going to continue to be a little all over the place, right? Powell is a scam? No, he actually is a real person, actually. Yeah. Good call scratching too. Well, I lost $5 on it, but yeah. in the end, I think it worked out, right? Because imagine how pissed I would be if I wouldn't have gotten 10 on it, right? I would have come short of 10 and then come back and lost 5 or more anyways, right? That, yeah, would have been a lot of mental capital lost. So it was good on me for realizing that the order flow was not behaving the way that it was supposed to. But I mean, this kind of comes back to the real problem was that I should have been taking 3.58, right? I had seen 3.58. I decided not to, I was just, I don't know, being lazy or whatever. And then when it got up here, I was like, oh, now I want it. No, but if I'd gotten that, then I probably could have taken profits up here and made $20 and been super happy about it.
Yellen says, I'm committed to taking actions that will...
So the timing was wrong. I was way too late on that. Despite recent pressure, the banking system is sound.
Potentially intervening if a smaller bank experiences the difficulties we've seen that pose the risk of contagion. So banks, of course...
I don't know if you can hear Janet very well there, but...
...liquidity when they face deposit outflows. And really that's...
How do you control for leverage?
For the founding
what do you mean by that?
1913.
So I always set my initial back tests up to really try and, there's no like sizing up of contracts. There's no like, doubling up or any of that kind of stuff. It's just, here's the signal. You take the trade. Does it make money or not, right?
To remain vigilant in the...
That would just be like testing the signal.
Very actively with federal...
If I believe that the signal is a good signal, then I'm going to start adding like risk management things and sizing up things.
See the situation is having improved. Aggregate deposit outflows have stabilized.
And how do I do that? I tell it to trade a certain size.
Details about these two banks. As I said, we know though that this is a very different...
I've had it done based on stop before, so like when it determines what the stop size is, and then I see how much in money would that be, and then make the number of contracts based on the account size.
We have post-crisis...
Oh, I do see that. And Steffa was a big absorption at 4015.
Improvements in supervision.
They're getting pretty strong downtrend here, though. That could be one of those notes that continues through.
There's time to evaluate whether some adjustments are necessary in supervision and regulation to address the root causes of the crisis. I don't want to speculate at this point on what those adjustments might be. What I'm focused on is stabilizing.
With you so far, Akshay.
And restoring the
contract margin is 2250 and the notional is 100K, a leverage of 44. Sure.
Chair for Supervision, Michael Barr, will undertake a thorough review of the failure of Silicon Valley Bank with an eye to determining next steps. So there will be time to consider whether some adjustments are necessary. Now we need to stabilize the system and restore confidence in its soundness.
Thank you for that answer, and also thank you for your timely comments around deposit insurance.
Yellen does say, I don't have all the details about SVB and Signature Bank yet.
Second question I have for you, Secretary Yellen, bankers in this room...
So let's say your results turn out a profit of 1K USD.
Greed index 38 out of 100, equaling fear, and the
how do you count that?
68 out of 100, equaling greed.
Center banks, globally active banks.
I'm
U.S. banking sector. Can you speak to the importance of kind of the industry working together and unity, and what banks of all sizes should be focused?
I don't think of it in that way, actually. I mean, if we're doing a fund, we probably do have to start doing those sorts of things, don't we? But what I do instead is I say,
providing credit
I traded one contract over a year. What was the profit and loss on that?
farms
And what was the maximum drawdown on that?
thousands of
And then the maximum drawdown would be, you know,
and
my account would have to be at least X big
Decide on regulatory
for this to
changes.
work, right? So if I do a trade and it's only trading one contract, but like the maximum drawdown on it was 20,000, then I want to have probably double what the maximum drawdown was, right?
communities. And I think the most important thing for all
Well, it's not that it's half-assed.
focused on serving
The back tests are usually not
remains
to the point that I'm actually going to trade them
we have seen
or that I'm going to turn it into a fund. Because you're right, if we were going to trade it into a fund, we would have to start doing that sort of stuff, wouldn't we?
aftermath
We would have to be like, okay,
and those businesses and households.
what was the performance of it on the basis of the leverage that we got and compared to other peers in that industry and all of that sort of thing to see how good that strategy performed.
There.
But what I'm saying is that what you get from these individual signals never gets you that far anyways, you know?
And
Like I'll go and I'll do the back, like if you go and you do a back test, and I'm just saying
reassure their
all in, all out, one contract, trade it for 5 years or 8 years or however long you can do it, right?
the government
And the Sharpe ratio comes out to be like less than 0.1, then why even bother going through to all of those other steps,
and all of us need to show
right? If the Sharpe ratio is that bad.
that that's the case. So let me just say again that all of the actions that we have taken are designed to bolster confidence in the banking system and to demonstrate that we're
Because the purpose of the back test for me is not
steps that are
to
necessary
use those performance results to start a fund,
to the banking
right?
system and their deposits are safe.
The purpose of that for me is to determine if there's actually an edge in that signal.
You arrived talking about the strength and the resiliency of the industry and confidence in the industry and the health were exactly the themes that we used to kick off.
Back to the open.
Certainly on that. I know your time is tight.
The
We have
Russia's
1,000
Putin says, I
places to go,
discussed
but
the
as a
power of the
treasury vet myself,
Siberia
I have
2
to
gas
ask
pipeline in
you
talks
about
with China's
another
President Xi.
really important issue around financial
I don't know what the deal was with that pullback, but there was a reasonable amount of volume behind it. So
the debt ceiling, something you're very familiar with.
I think I should be pretty happy with how I played it today,
economic
right?
to our markets, to our
It wasn't a terrible trade.
given the situation where
I did get +5. Oh, I got MAE of 9 and MFE of 7, actually, is what I got.
Putin's
Would have been MFE of 9 if I had held on all the way.
billion cubic
And to act swiftly to
meters
ensure
of
the
gas
full
to
phase
China
credit
per
of the United
by
States.
2023.
I consider it utterly essential for Congress to
So just to
act
repeat that, Putin says
to
Russia will deliver at
suspend
least
the debt
98 BCM of gas.
So I guess there is one that we could go and do all that, but then you can just kind of calculate it from there, right?
It says
Like
it's utterly essential for Congress to act to suspend or raise the debt limit.
Especially of 2011, when it took until the
I should maybe I'll do this today. I might have some time.
credit rating was
And maybe I could use the performance metrics in the strategy to tell it to adjust
Yellen doesn't worry about waiting to the last minute to act on the debt limit.
to adjust how much leverage it uses based on the historical drawdown that it comes into. So like you could give it a maximum drawdown to begin with, but then if it runs into a period that's a drawdown that's even bigger than that, it would adjust.
and small business owners. And
You might consider the euro. You know what? Live action, I totally would put it up here if I got the data.
Power of Siberia too.
most liquid financial system of any
It's comes into this like,
currency.
there's lots of things that we could add. How much does it actually benefit you,
When
right? Because I don't know if the amount of edge that I would get from the euro stuff would justify the data costs for me.
and this is something that we should prize and is
No, I think that he's talking about putting like the bund up and stuff.
be done to
That's what I assume you meant.
danger. And so
Or maybe you're just talking about putting the euro itself up.
I
Because I used to put the 6J up, right?
catastrophic.
But I didn't really. The thing is I don't find the.
Secretary Yellen says the US
Well,
financial
maybe we
system
should do an
and dollar reserve
experiment.
currency status should be prized and should not be threatened.
That we've ever seen, and the fact
I'll think about how to change things and because I don't think that if I put the ladder up itself that I would really notice it, you know, and I can get a pretty good idea of what the correlation is and everything with my dollar index and my euro chart here and everything. But I'll try and find a way to add cumulative delta onto the euro and the Japanese yen and take another look at that, because when I looked at that before, that was before my current understanding of things.
this is
And maybe I would, you know, see some benefit in the order flow over there.
contains deficit reduction.
No, the ES has been dropping pretty decently here.
That our debt to GDP,
It's a good 10 points down, 10, 20 points down.
and that net interest costs. That,
True, maybe I'm just assuming my own strict standards. Well, actually, if we ever get to the point where we want to start a fund, then we will have to do some of those things, and I probably will need some help.
to be on
Man,
sustainable fiscal.
that just reminds me of this thing. So the last, hold on.
Ensuring financial
address
fiscal sustainability is a priority for Biden. So just to repeat there, ensuring fiscal sustainability is a priority for Biden.
So there was this guy arguing price action with me because they posted a meme that was like, here's the price action traders, you know, saying the technical analysis doesn't work, and here's the technical analysis people saying that price action doesn't work, and I commented on that. Oh, well, you guys are cute that you still think that technical analysis stuff even works. And this guy that was in price action got very, very upset about it, and he was very pompous and full of himself. And from what he was saying, and of course we can't verify this, but I don't doubt him. It sounds to me like he's a rich guy that has been managing companies and has cash to burn already anyways, and that he's been trading the last 2 years, and that he's already trying to fundraise based on his trading.
Later.
So like, like I said, I felt like he was very narcissistic because he was trying to project all of this stuff onto me. It was like, well, but can you actually like raise funds off of your results and all of these sorts of things? Well, I didn't even respond to him, but like in my mind, it's like, well, I think that one day it would be really nice if I could run a fund. I think that that is something that would kind of be like the long-term goal, but I don't want to be trying to do that right now. I think that there's lots of other things that I need to do first, you know?
It's never been done, and prioritize.
Why don't you challenge? So trading competitions are fundamentally flawed, though, TLA.
I believe it's essential.
I mean,
Congress
it depends on what the rules of the competition are, right?
in order
Like if the rules of the competition were
catastrophic wound.
you trade for 2 years and the winner is the one that has the highest probabilistic Sharpe ratio,
For your timely
then maybe I might be in on that, right? But if the trading competition is just you trade for a month or you trade for 6 months, or the metric that you're judging the performance off of is who makes the most money, pointless. If I was forced to do a trading competition like that, what I would do is I would just come in and go all in leverage on something, right? I would take the fat-tailed approach. I would be like, okay, so here's the thing that's probably going to make a ton of money most of the time, and just stay in that the whole time. And then if we happen to be in the fat tail where that thing goes bust, then oh well.
Russia's deputy
Right.
PM Novak says Russia is close to reaching.
When you turn it into a trading competition where like the stakes are different,
So just to
right.
repeat there, Novak says Russia
the
is
thing that makes the most sense is to just put on crazy risk,
oil output
right?
cut.
Yeah, well, but that was the whole thing, was that like the guy, it was it's really disappointing to me, I guess you could say, that there's all of these people out on the internet that it seems like they're trying to actively cause other people emotional distress, right? He's saying that because he thinks that would have like a significant detrimental impact on my emotional state, sort of a thing. But it's like, well, I'm have no interest in trying to fundraise for a fund right now. Right? You're trying to project your dreams and what you want to do onto me, and I don't give a shit. All I give a shit about is, am I becoming the best trader that I can, and am I increasing my understanding of the market? That's the most important thing to me, and that I'm doing the right thing for my community. That's what matters to me. How much money I've gotten out of it is not really factor into it. I mean, it probably would help if you know, the amount of money that you make always helps, right? But it's not the primary goal. That's just kind of like a beneficial effect that comes from those other things over a long period of time. And I'm trying to go for the long haul. I'm thinking of this from a 30 years from now perspective, that when Seth is 70, where will he be at with trading when he's 70, right? When you have a competition, it feels like a competition all day, every day. Be careful. Well, that's why I'm saying that what I would do is I would just YOLO into, especially if it was like you could trade any asset that you want, I would just go and YOLO into some stupid ETF that we calculate has a really strong probability of doing well in that macro environment, and then just leave it alone, right? And then watch the other guy try and game themselves off of the thing that they know that I'm in. You know, but anyways, but it does kind of bring me back to like okay, so we do have a Series 65 now. I guess we do want to create a company off of it and everything. There's so many things that I haven't done that I would need to do to be able to get myself to the place where I would feel comfortable managing a fund. Yeah, if he really is managing, I don't think that he has a firm. I think that he just started his own little thing, and that is just him. He is probably full of rage, and everything is penis measuring. Probably. That's what I'm saying. It's like, for some reason, the price action traders seem to be the most narcissistic to me, because that's what it screams to me, is narcissism. Yeah, so I think that if we're gonna start a fund, that it will be a CTA fund, right? So I think that we still need to go and get a Series 3 first. So we need to get a Series 3 first and start a CTA. And I think that it would be more of a long-term focused sort of a thing. So what I'm trying to do is trying to go from the bottom up, right? You get a really intimate understanding of the market through scalping and day trading, but then eventually you turn that into edges that you get on higher timeframes, because that's where the money ultimately is at, right? And then, yeah, managing a fund maybe, but like that's the thing. I don't know what I'm doing. Probably wouldn't be very good at fundraising money. I'm not part of the old boys club. Doesn't bother me that I'm not either. I don't think that I want to be part of the old boys club. That sounds annoying to me. Bunch of people that are full of themselves and don't actually know what's going on. No, thank you. But it does kind of make me think, like, because I think that his intention was to make me feel bad and to elevate himself, to be narcissistic. But what it does make me think is like, well, we don't always have the most clear goals. Sometimes I just kind of start walking a direction and see what happens, right? But this is the sort of thing that we're starting to walk towards, that we're going to have to learn a lot more. And Akshay is probably the only person I think I've ever met that really knows a whole lot about what's going on in that
Enria
space.
says EU banks
And what I would have to do.
AT1s don't have the same clauses as in Switzerland.
I mean, I can put up a front and everything, but I would just
ECB's Enria says the cap on bank distribution is definitely not being considered.
how would I say, like, first me, I would probably be exacerbated with people. I don't know, like what I tend to find happens in those sorts of situations is that I'm treated like I'm really, really well liked in the beginning. And then as time goes on, it's just kind of like, there's something different about this guy. You know what I mean? Well, no. So actually, the very specific argument was, I said, price action and technical analysis is all a fairy tale, and his counter was,
The ECB is not planning.
oh no, plenty of people make money off of technical analysis. I know all of these people that are running funds off of it, and I'm running a fund off of it. And I ignored the fund argument, and I just said, okay, but like, what empirical evidence do you have that this particular form of analysis works, right? And he kept bragging and bragging and bragging, but I stuck to, like, what's the empirical evidence again? Because that to me doesn't matter if somebody started a fund and if somebody had success with this method or with that method or whatever. What I care about is, can you prove statistically using, you know, something that I can verify myself using empirical evidence that the claimed market behavior is actually a thing. That's what matters to me. And I don't give a shit how much money you've made off of it, because you might be lucky, right? You might not be trading the way that you actually think. You might be trading a completely different way, and that price action thing is all just a front for what your deep psyche is actually doing. Like, how could I ever possibly know, right? The only way that I know if a claimed market behavior is actually a real market behavior is if you can prove it with empirical evidence. I have some sort of a back test or statistics that I can run against any data set that I want, right? And what it came down to was I thought it was funny. I thought talking to that person was a little stressful, but what it came down to was, no, he didn't have empirical evidence. Right? No. So the having a firm and having success with a firm does not prove a claimed market behavior. It just proves that a particular person was profitable during a certain time period. Right? I really don't understand why people have such a hard time understanding this, right? This is like, I feel like there is like a, oh yeah, there's a book called the Encyclopedia of Technical Analysis. So most of, if his hypothesis is this works for me, but that's not what the hypothesis is. The hypothesis is that price action is an effective method for analyzing the markets, right? That's the hypothesis. So how would you prove that hypothesis? Number one, you would have to prove that there is an actual market behavior that the price action is picking up on and that the price action effectively predicts. That would be one way of doing it. The other way of doing it would be to get a large number of people, not just one person running a fund, but let's say 100 retail traders, and you teach them all that thing and then you see how they perform. That would be another way of proving it, right? Yeah, define price action. Yeah. It's super vague, and I don't think that he really went into what his definition of price action was. But I think that generally what they're talking about is trying to use the past price pivots as well as breaches of critical levels like the highs and lows, and using that to select optimal entries. Right. Well, no, it's not. So my definition of technical analysis is not narrow, though. My definition of technical analysis is actually more broad than the definition that the alternate definition that some people try and use. Right? Because the definition that they're trying to use is anything that's not fundamental, analyzing anything that's not fundamental information. Whereas my definition is trying to make predictions based on past price and volume data. Yeah, so I'm familiar with like some of the technical analysis stats sort of a thing, but if you actually go through and run those sorts of stats yourself, and first of all, you have to have an algorithm to determine like what is a head and shoulders and that sort of a thing, right? But when you run those kind of stats yourself, what you're going to find is that they actually shift around. And so what happens is they find all of the patterns that they have, and then they say, these are the ones that are really good, and these are the ones that aren't really good. And then they say, see, that means that it works.
Further cooperation.
So what that is it's a selection bias, right?
Cooperation to achieve new goals.
It's like I've shown you guys this many times before, right? Where I can go and do a test on every candlestick pattern over the past year and say, okay, which candlestick pattern works the best? And then you run it on another year and it completely changes, right? So these stats are not consistent. I don't agree with that at all. So, and Murphy's not the book that I look at. When was Murphy's book written? I haven't read Murphy's book, to be honest. Publisher 1999. I did take a small trade and we gave up on it. Yeah, no, the book that I do was what is it, Edwards and McGee? Yeah, the place that I first learned about technical analysis was Edwards and McGee. It was this book right here. I've owned this book since 2009. I've owned this book since 2009. I would say that their kind of approach is like technical analysis is everything that's not fundamental analysis, but then it comes down more to, in particular, trying to make money off of
Basically,
trends.
it remains European banks performance to be resilient, albeit divergent, as economic reset kicks in.
So you do use market analysis? Well, there is and there isn't. Like this is the whole thing. This is what I'm trying to say to people is like, if you come in here every day and you look at the market and all you're thinking about while you're thinking about the market is quote unquote price action. Okay. Which again, price action has to do with looking at previous pivots and identifying areas of support and resistance, and then there's rules about how you trade around the support and resistance, right? Like they'll say there's a breach of the highs, and then you want to see it come back down and break the structure over here, and then you want to see it try and breach those highs again and not make it, and that's where you're going to take the short instead of taking the short on the initial breach or something like that, right? That's what price action is. Okay. The reality is that price action is not a formally defined thing, and it never has been. Price action is simply a brand that people use to sell stuff, is the reality of it. But that's how it's practically taught. The people that out there that are using the term price action, that's what they're teaching. You guys are saying I'm hearing all sorts of stuff now that I'm like, what the hell is everybody going on about?
Jinhua says that China's President Xi said during talks with Putin in expanded format.
Okay, but anyways, so there have been books and so forth that have said like, here are technical analysis patterns and here's what the probabilities are on them, right? Those are examples of look back and data mining biases, right? So if you come in and you look at all of the patterns and you look at it over 30 years and then you say this is the pattern that performs the most, what you're doing is your data mining bias. And what ends up happening is that if you then go and turn and you look at a different data set, you don't get the same result. And it doesn't end up being profitable. It was by chance that that's the pattern that ended up working the best, right? So if we go back through the history of this, right, there was some studies that were like, oh yeah, like maybe there is some point to this technical analysis, this sort of a thing. And then what happened is the data scientists started going back through it and they started saying, well, there's all these problems like data mining and look back and all this sort of stuff. So they started using the tools that we use in data science to help us overcome those problems. For instance, like forward testing. Like you can come in and say, okay, adjust things to work on this market, run it for a month, then adjust it again, and then you run it for a month, and you're doing that testing and then running it on a month in the future, right? And then if it works after that, then you have a much better chance of finding something that was successful. And when they started doing those sorts of things, they found that none of these technical indicators had any kind of efficacy whatsoever, right? Okay. But listen, if at the end of the day that profits matter irrespective of how you came to them, then just go and put on a ton of risk, guys. Seriously. Like honest to goodness, you have $50,000. You want to make the most out of that $50,000 that you possibly can. Just go and put an S&P 500 contract on, just buy because stocks tend to go up. Just buy an S&P 500 contract and let the leverage ride. And 80% of the time that will work out and you make more money doing that. Just take one contract, put it on the S&P. You'll make more money than like 95% of people that try to do this, right? No, I don't think that you guys understand the logical fallacies that you're running into, okay? If there is a market behavior that we claim is a thing, you have to prove using empirical evidence that that market behavior is a thing, okay? That somebody that made money and claims that that is a thing is not proof that it is actually a thing. They might have been lucky. They might have been trading on other things and not realized it. It may have just been a function of the time period that they traded. There's all of these different reasons why that's not reliable. The reason why, guys, we have the scientific method is because those heuristics don't work in these kinds of situations. If you want to actually know how the market actually behaves, like really actually behaves, not just how people on the internet think it behaves or what they claim it behaves, you want to understand how the market actually behaves, you need empirical evidence. And yeah, lots of people have made money on the stock market. They're outnumbered almost 10 to 1 by people that lost money from the stock market. But just because they made money doesn't mean that the things that they say about how the market behaves are actually true. Why with 50K? I think that 50K is about is like the most reasonable drawdown for you to do. I think that if you had less than 50K, it probably wouldn't be worth doing, right? I'd have to go back and do a little bit of volatility analysis on that one to be sure, but right? So going back to what Lucas said, when all is said and done, there are two types of traders, winners and losers. Okay, but guess what? Like, here's the thing that I don't think you guys are understanding. You go and you find a person on the internet and they have a YouTube channel and they have a big YouTube channel because they've been a successful trader. Okay. It is more likely that they got lucky than that their strategy actually works. Let me say that again. You go and you find somebody that is a top performer in the markets. It is more likely that they got lucky than that they are actually doing something based on how the market actually works. Why is that? Because when you outperform like that, it's because of something crazy that doesn't happen very often. Right? So those people that are in that top performance rack, at least like on a retail level, okay, they're usually just lucky. And what happens is you all look at that guy. It's like if I put 1,000 monkeys in a room and had them trade. Every day I asked them to place a trade, buy or sell or whatever the deal is, right? And then after 5 years, I went and I took the monkey that traded the best, right? And then what you guys are all doing is you're like saying, okay, well, we need to understand why this monkey is so good at what it does. We need to, okay, so this monkey eats lots of bananas. That means that I need to start eating lots of bananas too. Right? It's ridiculous. It's data mining bias, right? Is in a large enough data sample of something, you're going to have one thing that works really well. That doesn't mean that there's actually something to it.
So just under 10 minutes away now to expect the comments from China's President Xi and Putin in a joint statement.
So Uzi says, why does that not apply to you? What makes me different from the other people is that I'm not trying to make claims based on my performance. I'm trying to make claims based on empirical evidence. Because I know that how good or terrible I do means nothing as to whether or not there is a square root law of meta order impact. It has absolutely no connection whatsoever. Right? You need to get past this. This is the same problem. It's fundamental, guys, to what we're talking about here on the channel, which is what? The market is not efficient. What does that mean? One person having made money in the stock market is not an effective indication of whether or not their strategies actually work. Right? Because that's one person in like a one sample. I mean, if you did it and you traded for like 30 years and you were profitable all 30 of those years, then probably there's something to it, right? Okay, but that's not what you always see. It's always this guy traded for 2 years and they made a ton of money, so that must mean price action works. No, it doesn't mean that price action works, guys. It doesn't mean jack shit, especially only 2 years. It'd be so easy to say, yeah, you have this TA pattern. Here's the market. Well, so what we're trying to say in TA is that when you have a pattern that the market is more likely to do a certain thing after that, that pattern is somehow predictive of what's going to happen next, right? That's the heart of technical analysis. The market is not informationally efficient, and the consequence of that is that there's going to be all sorts of shitheads trading off of all sorts of bullshit that is complete nonsense and are going to be successful. I promise you, you could go out there and find somebody that trades moon cycles. You could go out there and find somebody that throws chicken bones on their desks and uses that to decide what the stock market is going to do next. And you would be able to find somebody that can claim that they were successful with that for at least 2 years. Does that mean that chicken bones are effective at predicting the stock market? No!
From China's President Xi and Putin during their...
The only way to prove that a market behavior is actually a thing is empirical evidence. Anything else that you're using to try and make those determinations are logical fallacies that are causing you to waste your time with things that aren't real. Yeah, my friend uses the moon cycles and he cleans in 100K clips. Okay, why did I take the trade that I did today? I took the trade that I did today because we were seeing a general risk-off situation and the flows were confirming it. Or sorry, we were seeing a general risk-on trade and the flows were going along with it. And when the flows started to change and started to become unusual, I got out, right? Now, I can't explain why we had this larger move up. It must have been somewhere hidden in all of those headlines that we saw come through at that time that maybe suggested they would come back up. But how many years do you have to be profitable to claim that you have an edge? You can't. So that's the whole point, Kulud. Being profitable does not prove an edge. Right? The edge itself should be able to be proven empirically. Any true edge, if it's really truly an edge, can be proven empirically. People might not know how to do it, but it should be possible to prove it empirically that it's an edge. No. No, so why does that not prove it? So if you took 100K trades per year for 5 years and you had a positive expected value, is what you're saying, right? What does that prove? That proves that you were profitable. That doesn't prove that said claimed market behavior is a market behavior. Do you not see why those two things are not the same? Right? I would think that probably if you are trading that much, that you do have some sort of an edge. But like, that's the thing, is you might think that the edge is this, and you might actually be using news and not know it. How could we ever possibly know, right? What makes it empirical? What makes it empirical is other people's ability to go and verify the results. They should be able to go and do the same experiment and come out with the same results, right? Now, in the case of the market, we have the ability to backtest things and stuff. So if you can give me an algorithm and I can run that algorithm on any data set that I want, then that can empirically prove that a particular strategy works. Or if I can go and I can run the stats on it and I get certain market numbers out, like what we do with the square root law, for instance, then we can prove that that particular statistical behavior is actually a thing, right? As long as the person using them is profitable, then just gamble.
So shortly expecting comments from China's President Xi and Putin during their live statement.
If you can't prove anything, not even with a 10K pool of profitable trades, then I understand what we were arguing about. If this is, well, you can't, like, again, you're using a logical fallacy. You're trying to say, because this person made money, that must mean that this strategy works. It's not. If you think that a person having success with a strategy is proof that the strategy works, okay, or that the claimed market behavior that they're basing that off of is true, then you're stupid and you shouldn't be trading. So you don't understand logic. You need empirical evidence, because people get lucky.
Sell $60 billion of 4-week bills.
And again, like I said, with the way that the market works, it's more likely that they were lucky. Especially on a 2-year time period. You've gone and you've done like 10 to 30 years like Renaissance Capital has. Like, if somebody came to me and they showed me Renaissance Capital's results and it was just 2 years, it's probably bullshit, right? Yes, guys, you don't just if that's what you want to have, no joke. If you want to have 2 years of profitable trading, where you size up and you've made a ton of money, okay, I gotta warn you, it's gonna really suck. Because what's going to happen is you're going to blow up. You're going to be profitable for 2 years, and then one day you're just going to completely blow all of it. That's what's going to happen if you do this, okay? But if you want to have those results so that you can go and brag to people on Reddit and whatever it is that you want to do, just take a teeny tiny little profit and have like 10 times the risk on that or something like that. And limit your trades to certain technical pattern locations where it appears that the market volatility is decreasing. That's all you gotta do. Yes, Lucas. So, Lucas, if you had 10K trades and you had a 75% win rate, what does that prove? That proves that you were profitable. Does that prove that Akshay can go and do the same thing? It does not. So what happens if you go and you made money and you got those stats, and then Akshay went and did it and he got completely different results? What does that mean? Does it mean that Akshay is stupid? Well, he does have, supposedly his IQ is lower than average. But it could mean that you don't actually understand your strategy. It could mean that you don't understand why you're actually getting a 75% win rate. It could be things like you are factoring in the news and you don't realize it, right? Okay, if you have 5 years of back testing and I can come and run that on my own data and verify it, and now you can say that's a profitable strategy. Yes. But what's the difference, guys? Empirical means that we can verify it for ourselves, right? But I have to say, if you have a back test and it's less than 5 years, I don't trust it. But that is what I'm going off of what empirical, based on, concerned with, or verifiable by observation or experience rather than pure theory or pure logic. We have to be able to verify it through observation. Right? So the problem is that you're saying we're able to verify that so-and-so is profitable, but that's not direct evidence to the particular market phenomenon that we're talking about. Right? You see the disconnect? In other words, how much money Seth has or hasn't made from the stock market says nothing about whether the impact of large meta orders follows the square root law, right? The impact of meta orders follows the square root law. It's a very well proven empirical observation about the markets that exists regardless of how well Seth does, right? Markets have changed in 5 years, is true. I'm just telling you, like, in order to get enough samples, usually to have like a statistically significant result, it takes about 5 years. Usually. 2 years is not enough. No, but how do you know that it was the strategy that made you successful in that period? Right? If we cannot duplicate your exact trades, right? Like if I have an algorithm, then I can duplicate the exact trades, and I can say, like, we can't come in and say, okay, here's how Lucas trades. If he traded in 1985, how would he have performed? We can't do that because we don't know what trades he would have made, right? Which is that we can't observe that. We can't verify that for ourselves, right? That's why it's anecdotal, right? Anecdotal, based on personal accounts rather than facts or research. Does Lucas, I don't think that you have you read Nassim Taleb's book? Because it sounds to me like you need to go and read Fooled by Randomness. Okay, because the reality is that if you are trading, like, scalping 20 times a day, that means that your strategy is going to have even fatter tails, and you need even more data samples to verify your strategy. And if you're trading like 20 times a day, I would argue that you probably need hundreds of thousands of trades to verify that strategy. No joke. So will you be able to do that in 5 years? I think you might be able to. Well, like what? Where's my calculator? 5 years times 360 days a year. I know there's only like 250. Let's do it that way. Okay. 250 times 5 years. Oops. 250 times 5 years. And you're taking 20 trades a day. Okay. You need 10 times more the number of samples than what you would have. Assuming that's the kurtosis of the actual strategy necessitates 100,000 trades. So based on how I understand Nassim Taleb does things and everything, it doesn't surprise me in the least bit that that's how he made it, that he was below market for 9 years and then had 2 years of big returns. That's exactly how his strategy is intended to work, right? You're right. It's anecdotal. It's not ANCE. It's ANEC. Hey, I'm like way over time now. I think I proved the point. Right? You gotta. I understand that you don't think it matters, but this sort of shit really matters, because the reality of it is this. How many of you are actually doing a trade where you're making 75%, winning 75% of the time on equal risk reward? Probably none of you, but you know, how do you find something that actually works, right? What is effective? Defining what is effective. I'll tell you what is effective at finding what is effective. Empirically backed scientific method, because we're talking about things that are so big and have such fat tails and everything. We as humans our brains are not capable of understanding it on our own. We need these outside tools. And if you take the standard human way of doing it, which is find somebody that's having success with it and then just copy their methods, because of the way that the stats work out and everything, you're more likely to learn something from somebody that was just lucky. That's why you have to rely on empirical evidence. Base your strategy off of things that you actually know is true. I promise you have a much greater chance of being successful if you do that.
According to CNBC,
right.
again, bank CEOs.
Gotta get going. I will see you guys tomorrow, Federal Reserve Day. We get it all out tomorrow morning, and then we can just focus on the Fed, right? Stay